The speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star, then the number 1 on your telephone keypad. If you would like to withdraw your question, press the pound key. Thank you. I will now turn the call over to Hopi Darling.
Good afternoon, everyone, and thank you for joining us today to discuss Volcom's 2009 fourth quarter and full year financial results. Joining me on the call today are Richard Wolcott, Volcom's Chairman and Chief Executive Officer, Jason Saris, Volcom's President and Chief Operating Officer, and Doug Collier, Volcom's Chief Financial Officer. First, some housekeeping items before we start. If you'd like to be added to Volcom's email distribution list to receive company information, or if you'd like to change your contact information, please contact Evan Pondell at 310-279-5973. In addition, be advised that this conference call is being broadcast live on the internet at Volcom.com as well as earnings.com. The playback of this call will be available for 1 year and may be accessed on the internet at both sites. Also, please be advised that today's call will contain certain non-GAAP historical financial results. Reconciliations to GAAP for these non-GAAP results may be viewed in our earnings release, which may be accessed at Volcom.com. Please note that all the information discussed on today's call is covered under the Safe Harbor provisions of the Litigation Reform Act. The company's discussion today will include forward-looking information reflecting management's current forecast of certain aspects of the company's future. In particular, statements about the future regarding our guidance, outlook for future business, margins, financial performance, customer demand, growth, and profitability all constitute forward-looking statements. These forward-looking statements are based on management's current expectations, but they involve a number of risks and uncertainties. Actual results could differ materially from those stated or implied by these forward-looking statements due to risks and uncertainties associated with the company's business. Certain risk factors associated with our business are set forth in our Form 10-K for the year ended December 31, 2008, and subsequently filed quarterly reports on Form 10-Q. The company disclaims any intent or obligation to update these forward-looking statements except as required by law. All forward-looking statements from today's call are qualified in their entirety by the foregoing cautionary statements. With that said, it's my pleasure to turn the call over to Richard Wolcott. Richard?
All right, well, thank you, Hobie, and good afternoon, everyone. When I look back at 2009, I can easily say it was one of the most challenging years for our company and for our industry. A turbulent economy turned the retail environment upside down, and yet Volcom managed to rise to the challenge and successfully navigate through the worst economic period in decades. In 2009, we accomplished two primary objectives. We stayed healthy and profitable, and we planted seeds that we believe will position the company extremely well in the years to come. To achieve these goals, our entire group attacked the environment head-on, ensuring that every aspect of the business was thoroughly reviewed, fine-tuned, and set for growth. I applaud the entire Volcom team for their relentless commitment, dedication, and drive this past year. And while 2009 created a seismic shift for us in our industry, it also marked the beginning of a new era for Volcom. I believe we are now emerging as a better organization and in a prime position to seize opportunities and take market share. In the next 5 years, we intend to become a dominant player in our industry. Our roots are deep, and our passion to push ourselves to the next level is at an all-time high. We believe the capabilities we have developed will help drive long-term profitable growth, and we are now dedicating ourselves to a multi-year strategic direction that we believe will position Volcom as a global leader, creating value for our shareholders. This emphasis will require time and investment and a commitment to align our resources with our longer-term goals. We firmly believe the time is now to pave the way towards becoming the #1 brand in action sports. Now let me now review several aspects of our business and provide some context for our growth plans for 2010 and beyond. As you know, the strength of our brand is the key ingredient to maintaining the health of our company. In order to maximize this strength while communicating to a wider audience, we have implemented several new and exciting marketing initiatives for the coming year. Just recently, we hosted our first ASP surfing event, the Volcom Pipeline Pro. The contest was held on the North Shore of Oahu and was a huge success with significant internet reach, TV, and media coverage. We are also partnering with the Maloof Money Cup Skateboard Championships and will be sponsoring the street event at both Maloof contests this summer in Orange County, California, and New York City. These events will be televised on Fox Network and broadcast live on both Fuel TV and the Internet. In addition to the Maloof and the Pipeline Pro, is the return of the Volcom Tour with headlining rock band Mastodon and Volcom Entertainment supporting act Valiant Thor. The U.S. part of the tour will consist of 29 stops, starting April 16th in Charleston, South Carolina, and ending on May 22nd in Lexington, Kentucky. The European leg of the tour just ended yesterday to a sold-out crowd at the world-famous Roundhouse in London, and the word on the street is that the tour is already a huge success. And finally, in the fall of this year, we will be releasing our newest snowboard movie featuring Gigi Ruff and friends. Along with these events, we also intend to increase our print and online advertising, roll out additional in-store displays and build-outs, and plan to continue to focus on specific product campaigns that have already proven successful. As you may recall, denim was a driving force for our company in 2009, with new styles highlighted in our road-tested marketing campaign. We also had strong success with our Proving Grounds campaign, featuring technical designs for our board shorts and our Creedlers footwear. Additionally, our Stone Age program continued to differentiate Volcom from other brands, providing our core retailers with exclusive product as a point of differentiation from larger retailers. I'd like to point out that this collection was recently awarded the Best Specialty-Specific Store Line by TransWorld Business. On top of these initiatives, we will continue to focus on our core athlete programs, Let the Kids Ride Free contests, in-store promotional events, social media networking, and general day-to-day branding attack. Now let's take a moment and talk about product. We took decisive action in 2009 to better our product presentation, and I believe we have made good progress in developing superior product that performs as well as it looks. Specific product categories in each of the three board sports, skate, surf, and snow, received particular attention. Let's start with our denim. I am pleased to report that our efforts to fine-tune our collection has really paid off. By offering a wider array of price points, fits, and washes, along with a focused marketing campaign, 2009 became the pivotal year for establishing ourselves as an action sports leader in denim. We are excited to continue to build on this momentum and plan to incorporate new floor displays throughout 2010 to further enhance our in-store denim presentation. Board shorts is another area that we continue to gain traction. Over the past 12 to 18 months, we have dedicated ourselves in the pursuit of building the best board shorts available. With a focused approach on design, sourcing, production techniques, R&D at the Pipe House, feedback from our team riders, and retailer roundtables, we've been able to grow this category and gain the respect as a top board short manufacturer. From our high-performance Bruce Mod, Dingo Mod, Dusty Mod, and futuristic stretch construction 3D Mod, our collection is now ready to compete with the best of them. Turning to outerwear, in 2009, we introduced our exclusive Gore-Tex thermal defense system, which creates maximum breathability and insulation through strategic three-layer construction. We've had phenomenal feedback both from a performance standpoint as well as the design of the product. So far, sell-through this year for our entire snow collection has been very good, and we received a great reaction to next year's product line at SIA. Overall, we are very pleased with the success of this category. Creedlers is also demonstrating solid potential. We shipped spring 2010 in early December to warm weather markets, including Puerto Rico and Hawaii, and so far feedback has been great. Part of the appeal is that the line is piggybacking on the success of our Proving Grounds campaign, in addition to a stronger array of styles for men's and juniors. Now, speaking of juniors, this category was challenging for many in 2009, and while we are seeing success in swimwear, Creedlers, and outerwear, the bulk of our juniors business is still facing certain hurdles. Whether fashion trends currently favor the action sports lifestyle or not, we believe there is still demand for brands like ours in the market. Our design teams are working extra hard to make sure our product direction is on point, and we intend to make Volcom Juniors a resource, and we intend to continue to make Volcom Juniors a resource for our retailers. In order to better compete in this fast fashion market, we plan to leave room in our juniors line to chase into categories or hot items as we see trends taking off. Fashion tends to be cyclical, and within time, we believe the juniors customer will gravitate back towards action sport lifestyle product. And when this happens, we intend to be ready to fulfill the demand. I'd like to note that Volcom was recently ranked the hottest juniors apparel brand in the Baird Board Sport Quarterly Report for Holiday 2009. And in the same report, Volcom was also ranked the hottest men's apparel brand, and Electric was ranked one of the hottest eyewear brands. With all this great product, it is imperative that our distribution remains healthy and balanced. Our core business was the first to show some recovery, and the past 6 months have been encouraging. Many of our customers have better aligned their inventories with sell-through, and the less promotional environment has helped to prop up gross margins. Although sales were down overall, the feeling out there is that the worst is probably behind us, and we are now in a build-back mode. Volcom is well represented at the core, and growth going forward will come from taking market share along with fulfilling demand from our strong sell-through. From a geographic standpoint, the West Coast was hit hard by the recession. However, we are seeing the environment starting to improve. The Midwest is also showing signs of recovery, along with the East Coast. In many of these areas, we are seeing more opportunities now than ever before to increase Volcom's in-store presence, and we plan to take full advantage of this. Outside of the core, we have spent considerable time with our specialty retailers and department stores to ensure everything from our in-store presentation to product mix is as strong as possible. We have also been focusing on specific marketing strategies to help drive traffic and have increased our efforts to build even deeper retail partnerships. In terms of PacSun, we are working closely with the new leadership and are excited about the changes there. PacSun continues to reiterate that Volcom is an important brand for them, and lately we have been receiving solid feedback about our sell-through. Overall, we are beginning to see our current business with PacSun pick up, and we are planning our future business with them to continue to improve as our respective strategies start to take hold. And finally, our Volcom branded retail stores continue to serve as a good source for understanding the consumer, as well as providing excellent brand exposure in key cities. We ended the year with 10 U.S. Volcom store locations, as well as 2 LS&S stores and 3 international stores. We also have 8 licensed outlet stores and 7 licensed international stores. We continue to fine-tune these existing operations and will likely not seek to expand this base too much in 2010. One new initiative we are excited about this year is expanding Volcom's online presence by implementing an interactive strategy, including the launch of a new Volcom.com website with a direct-to-consumer e-commerce platform. This strategy has been in the works for several years now, and we believe this needed to be done carefully and done right. We are currently planning for a mid-year launch, and we have been working with many of our key retailers to make sure this rollout is as smooth as possible. Let's now spend a moment to catch up on Electric. The brand wasn't immune to the economic slowdown, and the eyewear environment still remains challenging. But as times got tougher in 2009, the Electric team worked harder to lay the groundwork for the future. Electric's Q4 revenue was above plan, bolstered in part by a strong goggle season, as well as slightly better than expected sunglass sales. The release and excellent sell-through of Electric's Kyle Busch signature sunglass model played a strong role in advancing the strength of the brand. With a more focused sales strategy and a ramped-up product offering, we are well prepared to continue to build the business. At the recent trade shows, including Agenda, Expo, SIA, and ISPO, all of Electric's products received excellent reception, particularly the soft goods and the accessories. The brand's iconic Volt logo has been getting good coverage at the Winter Olympics, as well as the recent X Games in Colorado. In January, we expanded distribution for Electric sunglasses to approximately 100 Sunglass Hut locations, and this should continue to broaden the exposure of the brand. Electric also recently launched a prescription eyewear line in Europe, and we are excited to see how quickly this gains traction. In addition to a product range that is by far the best it's ever been, the Electric team continues to fine-tune its operations and lay the seeds necessary to expand market share in the future. Whether it's surf, skate, snow, motocross, or NASCAR, Electric is well positioned, and we remain confident in the brand's potential. I'd now like to turn to our global operations and start with Europe. Overall, Europe seems to be on par with the U.S. in terms of recovery. In Q4, we saw slightly better sell-through and reorders when compared with 2008. Holiday sales were good, and average spending was slightly better than last year. Top-performing countries included Germany, Austria, France, and Switzerland. Perhaps one of the most important accomplishments in 2009 was strengthening of our relationships with our key customers. We also boosted our marketing presence in France with the signing of superstar pro surfer Joan Duru, and we launched our first shop-in-shop concept store that is showing strong signs of success. Our total door count at year-end 2009 stayed steady as the new doors opened offset the closures we witnessed during the year. Now, going forward, we will continue to explore potential new distribution throughout the region, including specialty retail where possible. Like France, our strategy is to ensure Volcom is firmly established at the core before going to the next level. The good news is that we believe Volcom is emerging from the recession better than most of the competition, and which should bode well for our Europe business in 2010. Looking at other Volcom territories, we made great progress in our Asia-Pacific region, refining operations in Japan and improving product assortments. We are well established at the core in Japan and other image-appropriate retailers. The next opportunity for growth appears to lie in the further expansion of our existing distribution, attacking local product trends, and shop-in-shop concept stores. The challenge is that the Japanese economy is still tough, which continues to hamper consumer spending. But our brand strength and foundation remain strong and should provide the momentum necessary as we move forward. In terms of Australia, the economy is in better shape and the presence of our brand continues to gain traction. Working with our licensee, we strengthen our management team and are in the process of enhancing our sales, design, and production groups so that we can continue to attack the marketplace and become a more dominant player in this territory. With that review, let me take a few moments to talk about the future. As we kick off 2010, our strategic plan calls for us to take action now. With our hard-earned following, a rock-solid balance sheet flush with over $110 million in cash, growing cash reserves from operations, and no long-term debt, we believe we have the resources to step up our game. And while the competitive landscape has other companies distracted by their own unique issues, we believe there is an important opening for us to become the #1 brand and global market leader in action sports. But for Volcom to achieve and maintain best-in-class status at all levels and achieve our goal of surpassing the $500 million revenue mark in the next 5 years, we believe we need to make strategic investments today to increase our market share tomorrow. These include investments in our infrastructure to continue to create the highest quality product that is innovative and exciting, broadening our marketing reach with a clearly articulated message, and expanding distribution opportunities globally to support growing demand. With this in mind, our action for the coming year will support what we believe is a very exciting longer-term goal. A goal that we believe is worthy, achievable, and builds long-term sustainable value for our customers, employees, and shareholders. And while we set our sights on higher financial and operational targets, it will never be at the expense of the health of our organization. Managed properly, we believe we can produce both solid, profitable returns in the short term while building our company for even greater achievement in the not-too-distant future. As always, I'd like to thank the entire Volcom family, our team riders, retailers, and shareholders for their continued support and commitment. With that, I'd now like to turn the call over to Doug to review our financial results for the fourth quarter and full year. Doug?
Thanks, Richard, and good afternoon, everyone. As Richard discussed in his remarks, we have spent the past year not only weathering the economic environment, but also evaluating our opportunities at every level and in every territory around the globe to ensure we can capitalize when the time is right. We believe that time is now. For 2 decades, we have painstakingly built our most valuable asset, a globally recognized brand that attracts, resonates, and connects deeply with the global youth. Volcom is among the very top brands within this demographic, and there is increasing evidence that there is a great opportunity to further broaden our appeal. By the end of 2014, our goal is to nearly double last year's revenue of $281 million. We plan to maximize our opportunities to gain wider global exposure for our brands while staying true to our core riding heritage. In 2010, we intend to make continued calculated investments in our marketing and brand building efforts that we believe will create longer-term returns for our shareholders. We have the financial resources to pursue this strategy while also running a cash-generating, profitable enterprise. In addition to revenue targets, we are also mindful of gross and operating margins and intend to focus on margin-enhancing strategies throughout our organization. For annual consolidated gross margin, our target, both this year and over the next few years, is approximately 50%, as we achieved in 2009. Our recent investments in global expansion, including Japan and the UK, and investments in marketing and branding initiatives have mitigated growth in operating margins. However, beyond this year, we believe that we will again be able to leverage our SG&A, and over time, our target is to return to Volcom's historic, industry-leading operating margin in the 15 to 20% range. Our financial success will come from an integrated strategy that maximizes our wholesale distribution, international growth, exceptional Volcom and electric product, effective marketing, and implementing an interactive strategy, including the launch of a new Volcom.com website with a direct-to-consumer e-commerce platform. Our long-term vision is built around a financial model that is intended to leverage expenses and generate incremental cash flow and profitability. I'll now review our financial results for the fourth quarter ended December 31st, 2009, which exceeded the guidance we provided in early November. In Q4, earnings per share exceeded the high end of our fourth quarter guidance by 10 cents, driven by higher than projected revenue and gross margins. Revenue was above plan in Europe and electric, reflecting strong demand for our products. Gross margins exceeded plan in all three segments, underscoring better than projected sell-through of Volcom and electric product at retail, and an overall less promotional environment. Additionally, the improved retail environment meant less bad debt expense than we had projected. Further, we recognized an FX gain of $543,000, and our annual effective tax rate for 2009 was 31.7% compared to our projected rate of 34%. This lower than anticipated effective annual tax rate resulted in additional net income of approximately $683,000 in Q4. For the quarter, total consolidated revenue decreased 8% to $64.2 million, compared with $69.6 million in Q4 of 2008. Let me now break down our fourth quarter revenue by each of our three business segments, the U.S., Europe, and electric. First, let's look at the U.S. segment, which includes revenue from the U.S., Canada, Japan, and most other international territories outside Europe, as well as our domestic Volcom-branded and LS&S retail stores. Total revenue from our U.S. segment, including royalties for the fourth quarter, decreased 16% to $46 million, compared with $54.9 million in Q4 of 2008. A breakdown of the U.S. segment product revenue in Q4 by category is as follows. Our men's product revenue decreased 14% to $26.2 million for Q4, compared with $30.3 million in the fourth quarter of 2008. Our juniors product revenue decreased 34% to $9.5 million versus $14.4 million in the fourth quarter of last year. Earlier, Richard discussed the challenges in the juniors market and our strategies to improve in this category. Snow revenue increased 5% to $2.6 million compared with $2.5 million last year. As Richard mentioned, the snow category performed well in all regions, and reports from retailers indicated strong sell-through. Boys revenue, which includes our kids line, decreased 4% to $5.4 million, compared with $5.6 million in the fourth quarter of 2008. Revenue from our Creedler's footwear line was $596,000 versus $654,000 in the 2008 fourth quarter. Revenue from our girls' swim line was $752,000 versus $289,000 in Q4 of 2008. International product revenue, which is reported as part which is reported as part of our U.S. segment and consists primarily of sales in Canada and Japan and does not include licensing revenue, was $14.8 million, or 33% of our U.S. segment product revenue for the quarter, compared with $12.5 million, or 23% for the comparable period in 2008. The increase primarily reflects incremental revenue in Japan as a result of the acquisition of the Volcom distributor in Japan in Q4 of 2008. Looking at our U.S. segment revenue by distribution channel, revenue from our 5 largest accounts decreased 35% to $12.9 million in 2009 fourth quarter, representing 29% of U.S. segment product sales. In Q4 of 2008, revenue from our 5 largest accounts was $19.9 million and represented 37% of U.S. segment product sales. As projected, revenue from PacSun, our largest customer, decreased 42% to $6 million for the quarter, or 13% of U.S. segment product revenue. Last year, revenue from PacSun was $10.4 million, or 19% of our U.S. segment. 11% of total consolidated revenue, a decrease of 42% as compared to 2008. This decrease was anticipated and accurately reflected in our plan and guidance. Volcom has a long-standing relationship with them, and we are excited to be working closely with them and their new leadership. Excluding PacSun, revenue from our next 4 largest accounts decreased 27% for the quarter. We are currently executing initiatives to maximize our business in this new environment with these accounts. This includes driving demand for Volcom products through more nationally targeted advertising and marketing programs, as well as upgrading in-store merchandising. While we are not satisfied with the current sales to these accounts, we are encouraged by the improving trend over the last 2 quarters and by bookings for Q1, particularly with our men's products. In Q4, revenue from accounts outside our 5 largest accounts, which represented 71% of U.S. segment product revenue for the quarter, decreased 6% to $32.4 million. In the fourth quarter of 2008, revenue from the same group was $34.5 million, representing 63% of total U.S. segment product revenue. Excluding the incremental revenue from our Japanese operation, revenue from these accounts decreased about 12%. Since mid-2009, we have begun to see signs of stabilization in our business outside our 5 largest accounts. This group primarily reflects what we refer to as core shops, which are geographically diverse and are important to our industry given their influence on action sports culture. During the recession, we have worked closely with these accounts and are pleased to see the continued momentum and viability among this important group of retailers. Now let's look at revenue from the Europe segment. Revenue from Europe was $12.9 million in the fourth quarter of 2009, compared with $10.9 million in the fourth quarter of 2008, an 18% increase. The revenue increase over our previous guidance of $11 million primarily reflected better than expected demand of Volcom product and better than planned FX rates. In Q4, revenue by category in Europe is as follows. Men's increased 16% to $16.9 million, compared with $6 million in Q4 of 2008. Juniors increased 7% to $2.1 million, compared with $2 million in 2008. Our snow business increased 30% to $3.2 million, compared with $2.4 million in Q4 of 2008. Boys was $297,000, compared with $179,000 a year earlier. Creedlers was $101,000 versus $146,000. Finally, revenue from our third business segment, electric, increased 40% to $5.3 million, compared with $3.8 million in Q4 of 2008. The electric business appears to have hit a positive inflection point in Q3, and we are pleased to see this momentum continue in Q4. Turning to gross margin on a consolidated basis, Q4 gross profit as a percentage of total revenue was 49.2%, compared with 44.4% in the same period in 2008. In our U.S. segment, Q4 gross margin on product was 48.1%, compared with 42.7% in Q4 of 2008. In general, retailers reported strong sell-through of Volcom product, which subsequently limited the negative impact of year-end discounting. Additionally, the acquisition of the Volcom distributor in Japan has created efficiencies in our Japanese operation and has resulted in higher gross margins in that region. In our Europe segment, gross margin, as compared to 2008, was flat at 49%. Gross margin in the electric segment grew to 52.6% compared with 48.8% in Q4 2008. We are pleased to see this gross margin approach more historic levels as electric experienced fewer product returns than in Q4 08 and also sold more higher margin goggles. Selling, general, and administrative